Hey, this is Divestments coming to you with another short video. Today, I'm going to be talking about picking the right stock for what you want to do. Whether you want to trade options, whether or not you want to purchase that stock for the dividends, or if you're planning on purchasing that stock and holding it for long-term investments. So let's talk about TFS Financial. I just found out about this particular financial company. I just found out about it today. Had a webinar earlier today, and this particular company was brought up. Someone mentioned that they had purchased this stock for the dividends. So let's take a look at it. Now, if I wanted to purchase this stock to trade options on, I would go and get the option chain like you see here. This is an option chain, and I'm looking at three columns when I'm looking at an option chain. I'm looking at the bid, which is the price that I'm going to sell the option at. The ask is the price that I'm going to buy the option at. And the difference between the bid and the ask is the spread. And I never want to purchase an option with a spread that is more than 10 cents. So if you look at this option here, this option chain here, and we look at the 12.50 strike price, the ask is $1.20 and the bid is 45 cents. So you will be paying $1.20 for this particular option, but you would only be able to sell it for 45 cents. So this spread is more than 10 cents. We don't want our spreads to be more than 10 cents. When I go to the open interest here, and this is what OI stands for, it stands for open interest, I see the open interest is 0. What that's telling me is that I have nobody to trade with. That means that even if I did buy this option for $1.20, I wouldn't be able to sell it for the 45 cents or anything else because there's no open interest. So there's no one to sell to. So I would just be stuck with a contract that I can't get rid of. So it's important to know what options to purchase are good to purchase and which ones are not on the particular stock that you're looking at. So as far as purchasing options on this particular stock, the answer is no. Let's look at dividends. As far as dividends is concerned, the stock is a cheap stock. It's about $14 a share. It would be easy to accumulate shares because the price is cheap. So you would be able to rack up a lot of shares, not spending a whole lot of money, but you would be able to rack up the shares. And that's what dividends are based on. You get a certain amount of money for each share that you own at the time that the dividend is paid out. So for dividends, this would be a yes. This stock would be a yes for dividends. Let's look at long-term investing. So long-term investing, I want to look at a chart to see, over a long term, how has this stock performed? So this is a 5-year chart here. And as you can see, in 5 years, the stock has gone from roughly around, at its lowest point, $3, and at its highest point, about $22. So as far as an investment standpoint for long-term investment, I would say that this stock is a no for long-term investment. When you're looking at long-term investments, you want your stocks to be able to grow over time. So that means that as time goes on, the price of your stock gets higher and higher and higher and higher based off of performance and based off of whatever, maybe the product that it sells or whatever the case may be. But you want to see this stock go higher in price as time goes on. Now it did get higher. It went up to $22, but then it fell back to, to this area that it's in now, around the 10, 10, 14, around in that area. So because it lost value, okay, and it's not continuing to go up, I would not consider this stock a good long-term investment stock. Okay, so for long-term investing, it's a no. So it's important for you to pick the right stock to do what you need it to do and what you want it to do.